Welcome back. We're chatting to Glenn Silverman, who's the Chief Investment Officer at Investment Solutions. And coming to us from Old Mutual in Cape Town is John Duncan, Head of Sustainability Research and Engagements. Just during the break there, we're chatting amongst ourselves here in Johannesburg, Glenn. And I don't want to sound facetious, but what do you actually do? Because you just... You're not buying anything. You're saying to people like John, go and find me this product.
That's a great question, and that's 100% right. We have delegated part of our responsibility to managers, and we watch them. But we think that's really important, and we manage very substantial assets, well north of 200 billion rand under management. We have some power, we have some influence, and we speak to those managers and say, guys, are you taking these into account? We built scoring systems to actually look at it, and we want to see that it goes directly into the portfolios. This is not a kind of a nice to have, fuzzy, good feel type of thing. We think this is a direct impact on our portfolio. You will get better returns in the fullness of time. If you focus on this area, you can reduce risk in the portfolios if you do that. So we take we actually go and audit the asset managers to make sure that what they're telling us is actually happening.
Would you be able to put a number on what percentage of your portfolio is invested in what you would determine by that scorecard? Yep. Responsible investment.
I can. I'll give you the answer is 100%. 100%.
You're kidding me.
Yeah. So in other words, we had a very good hard look, and in fact, my board and the marketing department said, let's go and launch a green product. And I fought very hard against that. That may happen in the fullness of time, but I thought that almost demeaned and undermined my message. I've spoken to the team when we bought in as a business, the fact that we want to see our managers being sustainable across the board. In bonds and equities, in every part that they invest, we want them to be thinking about the long term. We want them to avoid the very short-term fluctuations. Many do this naturally. We want them to think about E, S, and G. And so we took an approach, the environment, the society, and governance. I think it's really important. Yeah. The governance aspects, in particular in South Africa, are very well managed. Our asset managers engage very directly with corporates, etc. But the discussion around the E and the S is just a much harder space. John is more expert, and you can maybe ask him questions there. But we wanted to pervade 100% of our funds.
John, let's go to you then. There's a difference between this and this is not bunny hugging stuff.
No, it's certainly not. My role here, and just to further to what Glenn was saying, is to bring, this universe of environmental, social, and governance type information alive in the investment process. As Glenn has indicated, arguably the world of governance has typically been well understood by investment managers, and typically, this kind of information is naturally priced into the market as it is. That's why you see different countries having different bond rates, etc. This reflects a natural level of sovereign risk, which is arguably a governance risk. When it comes down to a particular company, my role is to sort of try and filter out the noise and to look at what are the material long-term issues that are affecting a particular sector. So arguably, trying to get a better understanding of the quality of the labor relations practices at mining companies is a useful thing to be doing right now within the context of South Africa's market. At the same time, looking at, say, for example, the proposed carbon tax by National Treasury, understanding, what does this mean? How can this impact the sort of target price that our investors or our analysts are calling on a particular share? So it's really getting down to the sort of rands and cents.
Do you then go into the sort of management structures of a company and the ethics and governance and all the rest of it and assess those in order to bring them on board and put them into a portfolio, which you would then present to Glenn and he would then say to his team, go and sell?
Not exactly. We have taken an approach which says we think responsible investing is just really a professional new normal, and that investment managers basically need to systematically look at ways of considering environmental, social, and governance risks through their investment process, obviously being mindful of their current philosophy and approach. we have taken a decision to not go off and suddenly rebrand or come up with some new green products. We're just looking at ways of systematically integrating this into everything we do.
Who are you looking at here? Who are the people coming and looking for these particular types of products?
Again, I'm really trying to distinguish the fact that I say our total product range, none of it has an RI name against it. I haven't launched a green fund or a bunny hugging fund or anything like that. I have my equity fund, I have my bond funds, I have risk profiled funds. Whatever I have, this lens is being applied to them. We are scoring managers differently to the way we used to. We're saying that if those managers are not cognizant of these ESG things, and we don't tell them how to do that, there are multiple and various different approaches, and your sense of that, once you've assessed it, you might say, well, it's all priced in and I still bought the company even though it has mining issues and it's a deep miner.
But how do you market that? Because when we started this show, I thought, okay,
got a little fun here.
Yeah.
Yeah.
How do you put this across to your clients? And do you see a difference in the client profile that looks for this long-term view?
So I think the fact that we are primarily manage money on behalf of pension funds that have to take a long-term view. Mm-hmm. One is talking about the the average life of the entire kind of workforce and the pensions within that, whatever means, they're forced to take a long-term view. Plus, regulation has now forced them to take a longer view and an ESG view, a responsible investing view. So I think we're naturally aligned. We actually have no choice here. It's not like we choose to do this. I think this is really important and has to be done. Launching a separate product around it, some people have done that and not done that, and there's been branding and other opportunity. I'm trying to apply this in the way we think about everything we do in the business. And as I said, our mission statement is above average returns with below average risk. And this aligns perfectly with it. If I do a good job in that, and if RI assists me, and I believe very strongly it does, because we're taking risk and return into account, my clients must be more delighted. Hopefully I have a greater likelihood of giving them what I promised them.
John, from your side, where do you see this particular? It's a more of a fundamental than anything else, really. Mm. Where do you see this fundamental moving going forward?
Look, I think further to Glenn's point, the world of responsible investing is largely targeting big asset owners with a long-term time horizon. To systematically think about, some of these environmental, social, and governance type risks and or opportunities. Mm-hmm. So in the first instance, it's about raising the bar of practice in South Africa with the view that it will lead to some systemic change in the way we invest in South Africa. Having said that, I also think that there are opportunities that emerge out of the world of sustainability. I just don't, I don't want to just talk to the downside risks part of it. There are real opportunities. So, and some of those opportunities exist outside of the listed environment. So, arguably, if you had to say, well, how do you invest in renewable energy, for example? In South Africa right now, it's very difficult to get exposure to this green/sustainability theme in the listed market. You have to look in the unlisted space, so either private equity or debt. And perhaps over time, my hope is that the world of responsible investing raises the bar, and as a result of that, you start getting more real investment opportunities that emerge that are arguably the key building blocks of a long-term sustainable economy. Obviously, that's what the whole world of responsible investing is trying to achieve.
I think that's part of the dilemma that a fair amount of possible investors would have. I know my wife, for example, is absolutely obsessed with looking at investments in water. But it's difficult to find investments in that particular field. Although I can understand where she's coming from and I can see the value in it. But there you would have to go into a very high risk area like venture capital or something like that. So it is difficult to look at specifics here, and you need to package stuff up.
I think that's right. I think obviously globally easier, much more choice. You can find things, you can find themes, you can find many companies to invest in that might take a particular theme, etc. South Africa a lot harder. John gave the example of the renewable energy sector. How do you invest in the listed part of our market? Very, very difficult. So it is a challenge. It is a challenge. Obviously, our lens is an easy one it's difficult, but easy from the perspective we apply to everything. So please think about all these aspects of risk and return when you're looking at your portfolios. Adjust your discount rate, take the balance sheet into account, look at contingent liabilities, externalities, pollutions, stranded assets. There's lots of things that people need to kind of think about. I think the thematic side is a lovely space. We've spent a lot of time meeting thematic managers. And the most exciting managers we meet, they will pick up a theme like be a global thematic fund, and they'll pick a water theme and then go look for companies in that type of space. Haven't always necessarily had the best returns, but the sell is always wonderful because the themes just resonate with human beings. Your wife would look at this and say, wow, there's the water theme and there's this theme and I like it, etc. So I think that's an exciting space. We don't actually have one of those global thematic managers as part of, for example, our global equity construct, but spending time with them to understand some of the impact of these themes is very important.
I suppose the more you talk to them, the more themes come out and the more you start looking at what you need to package up and put into your basket of goods, for example.
Exactly right. And there's just so much more than that, because let's say, and I do think water is a extremely important theme. It's going to be driving conflict, it's going to be driving things that are happening in the world, etc. But again, you say, how many investment opportunities are there? What's priced in? Let's say whatever could happen from these things is all priced in. Well, there's no investment opportunity there. So it's complicated. And again, I think picking a sub-theme to me is very complicated. What happens if water is the theme now, but solar energy is the theme tomorrow? And what happens if it's, I don't know, deep level, whatever? So I think someone who takes maybe a slightly broader perspective, I think to the man in the street, my preference would be to take something that is more broad rather than very narrow. It gives more rooms for managers to maneuver.
John, we've got about 30 seconds left. What is your favorite theme?
Look, right now, one of the things that I'm focusing quite strongly is the governance practices of companies in the listed market. I think, there's a role, in terms of responsible investing. It's not just about pricing risk, it's how you show up as an asset owner. So one of the things I'm working on quite strongly at the moment is looking at the underlying governance and management practices of the companies we invest in. And so issues like independence of directors, executive remuneration, structure of boards, independence of committees, etc. These kinds of issues are quite close to my heart at this particular point in time.